Federal Reserve is widely expected to hold interest rates steady at its July meeting this week, as chances of a cut in September hover around 60%. Joining me now, Stephen Juneau, B of A Securities senior U.S. economist, as well as Terry Haines, Pangaea policy founder, still with us. Stephen, when we look at the expectations around Powell here, as I said, not the expectation that we will see any kind of cut to rates, but what do you think is going to be the message here from Powell this week?
I think it's going to be more of the same. It's going to be a wait and see message. There's really no rush for the Fed to cut. And we have to remember that Friday, they're going to get the all-important employment report where they might see some evidence. So why do you want to front run that? And then further down the line, the Fed has Jackson Hole, where it gives them another opportunity to maybe guide the market. So I think it's really a wait and see. We haven't seen material weakness on the labor market emerge yet. Inflation is kind of stuck at 2.8% when you look at core PCE, or 2.7%. So there's just really no rush to do anything at this meeting.
So, Stephen, it sounds like you're kind of on the same page as the Fed, that they are safe to sort of wait and see what's happening, and that the data has not justified yet a cut to rates.
Yeah, absolutely. I mean, I think that's the right approach for now. You have to wait at this point in time. When you have this dual mandate and you have this tension between the dual mandates where inflation is running above 2%, and it has been for a few years now, and you have upward pressure finally starting to emerge from tariffs, well, you want to be cautious with cutting into that, even if they are more of a temporary driven price hike. Even if it does mean that inflation is not going to be super persistent, you need to see evidence of that. And then when you have the labor market with limit rate at 4.1%, well, you just don't need to respond right now. There's no real need to kind of cut rates or ease policy rates today. And you have time, given where the economy is today, to really evaluate where things are headed, evaluate where inflation's going to go, evaluate where the labor market's going to go. So really, this meeting is more of a holding period, and then we'll see what happens over the next few months and how the data moves.
Well, of course, there's the economics of all of this, and then there's the politics of all this. And that's where Terry sort of comes into it and where his perspective comes from. Again, we had the president this morning saying he thinks the Fed should cut rates. What is all of this theater all about? The two of them meeting at the Fed, et cetera, all of the tweets and the rhetoric around this. What do you think it's all about, Terry?
Well, at some point it's going to occur to people that are out there trying to, quote unquote, defend the Fed, some of whom want Powell to resign to defend the Fed, which is hilarious. But it's not about removing Powell. Powell is Trump's scapegoat for stubbornly high prices and anything economic that's not getting corrected fast enough. Every time Trump talks about Powell, now we have multiple news organizations, including this one, having him on air talking about it, so that message gets sent publicly to the public that whatever you're concerned about isn't Trump's fault. It's these swamp people that we're concerned about. And finally, Trump will get credit whenever interest rates fall. And if I remember correctly, consensus is still 2 times this year. Trump gets credit for falling interest rates whenever it happens. So it's a win-win for him all along. But this isn't really about threatening Fed independence, and I think Hard Hat Palooza last week showed that pretty clearly, because there was no follow-up on any of it.
Well, Stephen, what do you think? Do you think there is a real threat to Fed independence here? I mean, the markets don't seem, at least the bond market is not showing much concern.
I think for us as economists, we tend to think about the Fed really needs that independence to actually do its jobs. And I think what the administration also learned in kind of that firing event, we're going to fire Powell, maybe we won't fire Powell, that give and take, that pullback. What they learned is that they may not actually accomplish their goals if they were to kind of destroy or reduce Fed independence rather. So that combination of factors, the independence of the Fed, that's really ingrained in economists, coupled with the fact that the administration's objectives may not be achieved by reducing Fed independence, I think that keeps it safe. And we've heard, as Terry mentioned, Powell's not getting fired. That's what the president told us last week. It's a bit of a distraction, I think, if anything, and that's what we're going to see kind of move forward.
Yeah, maybe to your point, Trump sort of figured out he gets the best of both worlds by just continuing to say over and over again that rates should come down and not actually acting on all of these threats to fire him.